Gold ended the Thursday session lower as the market sees follow-through selling from a dollar rebound. What levels are key for gold traders then right now? Joining us from the CME is Bill Baruch of II Trader. Bill, good to have you back on.
Thanks for having me on today.
So look at gold down for a second day in a row while the dollar is higher. How do you see the metal closing off the week from here? More downside ahead, Bill?
Well, there's trend line support that comes in right about 12.18 today, and it'll be a little bit higher tomorrow. 12.17 was a swing low about 2 weeks ago. Now, one thing that I've been telling my clients is gold has not closed below the 1200 area. Big support, 1201, 1205, has not closed below there since the February 11th breakout. And until it closes below there, you got to use this 1205 to 1220 area as a big support. And look, I like buying against it for the long term. And until it closes below 1192, you know, I think the market's going to stay in an uptrend.
Okay, so you mentioned a few key numbers there. So crucial support and resistance for you, Bill?
Yeah, crucial support, close below 1201, 1205, will damage the uptrend, but I'm going to give it to 1192 on a closing basis. You know, the 12 from February 12th, February 11th, there's a trend line that comes in today's session around 1218, 1217, and the recent lows are 1217 from about 2 weeks ago. So there's a lot of support that comes in from 1205 to 1220, and you got to look at that as just being a general support area. Now, the market, you know, we put out research here at II Trader, and we look at 3-star resistance at 1262 this week, and we could not get out above there. And if the market can recover and get out above there, look for a melt up.
All right, what about the dollar, Bill? I had one analyst tell me he wouldn't be surprised to see the dollar index pop up to 100 before the end of year. What do you see? Does the dollar have more upside potential?
Well, I am long-term bullish gold, but I am also near-term bullish the dollar. And don't call me crazy, I think both can go higher because gold is more about the yields, and I do not see yields going higher in the long term. So I think gold's going to be able to sustain price action despite a dollar recovery. Now, I do think the dollar can get back to 97, 98 as U.S. data kind of comes around, but I do think gold will hold ground. And I think you still have to be a buyer in gold until it shows you that break below 1192. Now, as well, if you look back in March, the dollar was at 98, and gold was at 1260, so this can be done.
All right, and quick thoughts on silver, which is doing quite well this week, even though it ended lower today. Did we see the bottom in silver?
Listen, there is tremendous value in buying silver when it was down there at $14, and there will be for the long term. But now up here, it's right above 16 bucks. It's been seeing a little bit of a better bid because of crude oil and price and copper over the last couple of days, as well as not to mention palladium today. But what you want to look at in silver is the October spike high right around 1640, 1650, and silver is some good resistance there. But if it gets out above 1640, 1650, you got to be long, and at the same time, gold should be recovering pretty solidly as well.
Good thoughts, Bill. Thanks so much for joining us today.
Thank you.
And
thank you very much.
And thank you for watching. We'll see you tomorrow.